Hello everybody, welcome to number 27. I'm Jack. Now, if you're anything like me, you're probably quite worried about the high petrol prices that we've got at the moment. There are also some indications, which I'm going to talk about later in this video, that high price might be something that is destined to continue in the future, that the era of cheap petrol is completely finished. But before then, I also want to talk about something that I'm slightly miffed about, and that is that the really big spike in petrol prices actually occurred with the invasion of Ukraine. Before that and after COVID, there had been a gentle upward trend, but when Russia invaded, that's when prices really spiked. What is really weird and what really bothers me is that at least here in the UK, the wholesale price, the crude price now of oil, is the same, and at one point was actually lower than before the invasion of Ukraine, and yet petrol prices at the pump are still about 20 to 25 pence higher. So why would that be? And it's really not for the reasons that you think, because what springs to mind normally is, I don't know, is it profiteering? Is it those hedge funds sort of blowing up the price of oil? Is it the oil companies not passing on the savings of cheap oil, or the petrol stations? Let's just stop and I'll take you through the figures and show you exactly what I mean, and then we can see if we can find some sort of something that makes sense through it all. So let's have a look at the prices of crude oil over the last few months, maybe going back a year or so, and I'll show you exactly what I mean in terms of the trends of the crude oil prices, which should really precede the petrol price at the pumps, maybe by a couple of weeks or something, but it should really follow it. So if we start by looking at obviously COVID times, and we get the halcyon days in terms of petrol prices of the 30th of November 21, where a barrel of oil was just $65. As sort of COVID gets under control, restrictions are lifted, the economies start to pick up again, and then we get to the date just before the invasion of Ukraine. And on that day, it was $93 a barrel. After that, it grew very, very quickly, and it initially spiked at almost $125 a barrel. Then it sort of dropped, but still maintained an average high price, probably of about $110, $105 a barrel. It then sort of started to climb again, and that was in June. And in June, it peaked. So in theory, by sort of late June is when oil prices should also have peaked, and they should have started to fall straight after that. Certainly, as we can see, the price of crude oil, this is the American crude price, but Brent sort of follows it pretty closely. That showed that prices were falling and falling up until the 15th of August, when actually $87, and the price was lower than before the invasion. Since then, it's sort of gone up a little bit, but it's pretty much tracked the same sort of amount, which is 90 to 95, something along those lines in between. So it's had all the time from the 7th of June, when it's peaked, really to start following the trend and go down and start following the oil prices. But as you will see, it hasn't actually done that. Why? Let's just move over. So these figures here are downloaded from official sort of UK government data. What we have here is, first of all, those amazing days in May 2020, and not amazing if you're in lockdown, but amazing in terms of petrol prices, because the average price in the UK at that point for normal petrol was £1.04, so more or less £1.05, let's say, to round it up. Hadn't seen those sorts of prices for years. Now, if we then scoot along, we can see that the price is rising as the restrictions are lifted. You know, 117, 120, 25, 27, 34, 45, and then it kind of stabilized a little bit the last few months until February 2022, when again it was at 147, and then in March it immediately starts to go up. That's just the average price, remember, to 161. In May it's 165, in June 183, and okay, the oil price had been going up till then. Then July is the peak price, 188. Now we get to August, okay, so prices have gone down again because it is 173. But you have to realise that it should be the same price as February, because all prices are pretty much the same as they were in February 2022. We are now in August, crude price is the same, and yet it's about 25 pence more expensive. That's almost 15% at the pump than it was then. Not just that, but I'm sure that there have been has there been a VAT cut or something of that kind from the government? That may have been before this, I don't know. But in any case, there haven't been any increases in taxes for sure. So where is that extra money coming from? Is it just profiteering? Is it the speculators, the hedge funds that are driving it up? Well, I actually put a post on my own personal Facebook about this a couple of weeks ago, and someone pointed out one factor that I hadn't considered at all, and which does make quite a big difference. It doesn't completely cover this, but it makes a big difference. And it is the value of the pound. So on the 24th of Feb, the pound was worth $1.34. Right now it is worth $1.17. That is a drop of 12.69%, almost 13%. If we look at what that is, so if we look at the price that it was before, so £1.47 in February 2022, and we add that extra percent, almost 13%, that brings the price up to £1.65. So it does bring it actually a lot closer. Because the pound is weak and oil is traded in dollars, we are having to pay more for that oil. Although it narrows that gap, there's still a difference of about 7 pence a litre, and I wonder where that is coming from. Is it just that the producers and everyone are dragging their heels, or is there another reason for that? But more interestingly, I think that the reason why oil prices are going up and will continue to go up is to do with the dip that we had at one point. I can't remember now if it was a year ago, a year and a half ago, when the price of petrol briefly went negative. I think the producers have definitely seen the writing on the wall. Renewables are going to be the way forward, and they know this, and they had two choices with how to deal with the fact that hydrocarbons and oil were coming to an end. One is keep production as high as possible, and in that case you will slow the process of adopting renewables as long as possible, and you'll keep the industry going as long as possible. The other option that they had is restrict output and raise prices. Now what that will do is, because the prices are high, the adoption of renewables will be brought forward. However, in the meantime, these petrol producers will be taking in more money with less effort. It also means that, knowing that the era of hydrocarbons is coming to an end, the other big problem is investment. How are they going to invest in all this? Why would they put billions of money in investment in an industry that they know is on a decline? This way, they don't have to invest, but they're almost going to take out the same value over a shorter term by keeping prices high. Those are my thoughts. Do let me know what you think, but certainly I am worried because, like many of you, I'm sure, I love cars and I do like petrol cars. I think there's definitely a place for electric cars, but I don't want petrol to become unobtainium. And a lot of people think that it's brilliant. If there's less demand for petrol, then the prices will go down and we'll be able to drive around our cars like this one without paying less for petrol. That's not the case. If demand continues to go down, less will be produced, there'll be less refineries, there'll be less economies of scale, and in the long run, actually, the price is going to get sky high for sort of normal enthusiasts like us. So don't think that that's going to be the answer. Thank you so much for watching. I really appreciate it. If you haven't subscribed, please do, and I really look forward to seeing you for the next video.